stock, they will raise 100, 400, 500 million to begin a new project, although many of them do very well financing from cash flow. In other words, they have a project for $10 million, no, that's small, $100 million, and they've got $50 million. So they put up $50 million, and they float convertible debentures for $50 million. And then they get the money to go forward, and the investors get a good deal, and so does the company.
But isn't that true? That's pretty high.
I recommend stocks because I've been in that venue for 50 years. I was the largest gold silver stockbroker in the world. And historically, between 1978 and 81, gold and silver shares went up 40 times what bullion did. And I tell people that you can expect that good quality shares will go up 5 times more than bullion will. And I think that's very conservative. And the junior and exploration companies, if they do well, will do even better percentage-wise.
So which ones should I be looking at to put the money into?
Well, if you are conservative and you just want producing companies, the 4 that I recommend are Agnico Eagle, which is on the New York Stock Exchange, Gold Corp, which is on the New York Stock Exchange. Incidentally, they all trade in Canada and Toronto.
Oh.
Silver Standard, which is over the counter. And the last one is Mindfinders, which is on the American Stock Exchange. And I only have one speculation at this time, and it's been the one I've had for the last couple of years, and that's called Helix Ventures.
And that's spelled
H-E-L-L-I-X Ventures.
H-E-L-I-X?
H-E-L-L-I-X.
Okay. And
Ventures.
what was that first
the
one?
The trades in the United States as well is in Vancouver, and that symbol is HEL.V or HLLXF.PK.
But that's pretty speculative. In other words, that's really sort of a gambling stock.
It's speculative, although they do have a mine.
All right.
So what was that first?
Which is a lot more than most exploration companies have, because they may never find one. I mean, these guys got a mine, hasn't operated for over 100 years, and it was very profitable when it did. So, we got to find out what's in there, so to speak, and I think it's there.
What was that first one?
I've been doing this for a long time, and I get a pretty good nose for this stuff.
And what was that first one you gave me?
Agnico Eagle.
A-G-N-I-C-O.
Okay.
A-G for silver, N-I for nickel, C-O for copper.
Gotcha.
Eagle.
But it's all speculative, but these are pretty sound stocks, the ones that Bob suggests, at least the first 3.
Okay, thank you for all your information.
Right.
I appreciate it.
Okay, our telephone number, 1-888-24-LIBERTY, 1-888-24-LIBERTY, or 464-8295. And certainly as you look and see what's happening in Europe, there's a lot of talk about Greece and Portugal and Ireland defaulting certainly on their national debt. What would be the significance of these countries were to default on their debt, Bob?
Well, first of all, I don't see how they can avoid it. Secondly, if you're in the Eurozone, which Greece, Italy, Ireland, and Spain are, it's very problematical. The root cause, one interest rate fits all. Number 2 cause, they never had a constitution. Soon they will have one. And it's not what the people in the European Union want, but they're going to have one. And so I think it's only a matter of time before the situation within the Eurozone deteriorates further. And even some very, very strong countries that are not in the Eurozone, there's only 16 European countries in that Eurozone. The rest have their own currencies. And Sweden has the krona. And the krona's come down precipitously. And so as of the ruble in Russia, which I consider part of Europe. And so if they can have real serious problems like the UK and the United States, I'm sure these others I've just mentioned can have even more serious problems. And on top of the fact that they spend too much, they have too much debt, their productivity has not kept up with countries like Germany. And their unemployment has grown quite a bit, whereas in Germany it hasn't. And I think Germany is sick and tired of carrying the rest of the Eurozone, because it's their balance of payment surplus that these other countries who have deficits are using to stay solvent. And so, in the end, 2 years from now, maybe, the euro is going to be in serious trouble. But so isn't the dollar, and so isn't the pound. So how do you solve that problem? You don't own them. You own gold and silver-related assets.
Well, now, what about the krona? Were you saying that the Swiss currencies is falling, is having some problems?
It's Swedish.
Oh, I'm sorry.
They have had problems as of late.
All right, fine.
Not Switzerland. Switzerland,
yeah,
and Australia and Canada and Norway are really the top currencies in the world today, because they're not deliberately devaluing their currencies and spewing tremendous amounts of money and credit in the economy like China and the U.S. and UK and others are doing.
Well, a lot of people are saying that China's really laying itself open for really tremendous inflationary problems and then deflationary collapse. Do you see that as a possibility?
A distinct one. They're looking at 25% inflation, easy. 9.5% growth this year based upon $1.8 trillion stuffed into the economy. They won't revalue the yuan and make it more expensive. They're doing all the wrong things.
Well, they're getting advice.
14% GDP excess next year.
They're getting advice from our friends in Washington, D.C., Mr. Geithner, Mr. Paulson, all speak fluent Chinese, and the Chinese who are listening to them are laying their country open for destruction.
This money that's been poured into the economy has to be taken out. They can't do it, or it'll collapse.
Okay, so they have no alternatives. If they continue doing what they're doing, pouring in more money, they're going to, of course, destroy the dollar. If they stop pouring in money, why, they'll destroy the economy. So no matter what you do, why, we're in real trouble. Our guest has been Bob Chapman. He'll be back again on our 8 o'clock program this evening. Bob, thanks very much. Look forward to talking to you then.
Well, thank you, and thank you, audience, and I'll be back.
Okay, well, that was Bob Chapman. Hope you enjoy him on our Monday program.